Hey guys, Lance Martin here. Welcome to the 2024 Real Estate Market Snapshot for November. I cannot believe we are in November and the year is slowly trickling away. The exact same QR code we've been using now since day one. All the slides, all the videos, and all the content I put out can be found there. That's at the Lance Martin link tree. So we are a couple days after the election. I don't do politics here, but I'm doing politics only to the degree that we can finally say the election year is over. So we'll see what happens. Let's the dust settle here over the next couple weeks or couple of months, and we'll see what happens. If your candidate won, congratulations. If your candidate didn't win, let's all be friends and we'll move on from there. So that's about the extent of my election coverage. So Riverside County Economic Summit, we've been talking about this for a couple of months now. We are approximately 1 month away, December 5th, Riverside Convention Center. I'm super excited. This is my first formal event that I partnered up with RIVCO, which is the Riverside County government, specifically the Economic Development Department. So I'm super excited for December 5th. Go back to that QR code, click the link wherever you're watching this down below, and you can register there. I'm not really sure how many people we've got. I think the room is good for 500 or more, so hopefully we'll have a good turnout, and we will see you on December 5th. So let's go ahead and jump right in. Our Inland Southern California update. So here we are. As always, we're going to start with median price. Keeping in mind, we're in November. We're looking back to October. And basically, 3 of the 4 counties we follow were up. The only county that pulled back a little bit price-wise was Orange County. The other 3 counties actually saw appreciation in the month of October. I emphasize that because it's not unusual. If you go back over this 15-year chart, and you can click on this later if you want it, and you can look at it on your own, seeing property values pull back in October, November, December is not unusual. So seeing this little itty bitty pullback in the month of October for Orange County is, frankly, it's normal. And what's not normal is actually to see prices rise. If we went back and we compared every October for the last 15 years, the majority of those would probably see either flat appreciation or maybe even a little bit of pullback. But at any rate, 3 of our 4 counties saw positive numbers in the month of October. Very exciting to me. I've highlighted in my little green arrows here 5%, 4%, 4%, almost 10%. As I've been talking about for the last few months, we've finally been able to say we're seeing nice year-over-year appreciation. And what I define by nice is mid-single-digit numbers, 3, 4, 5%. So in 3 of our 4 counties, we're 4 or 5% year-over-year appreciation. By the way, if you're a little confused, Lance, I thought you said that Orange County was down. Well, Orange County was down from September to October a little bit, but from October to October, up 5.1%. That's healthy. I like it. San Bernardino is a little bit of an outliner, up almost 10%. But anyway, I'll take it. You know, we got some reasonable numbers. So bottom line is property values are stable. Property values are up incrementally. And again, a 4 or 5% year-over-year appreciation in 3 of our 4 counties is nice. We need that. So there's the numbers. You can click into the link if you want to get a little bit more information on exactly what they are. Click into the link. What link? This link. This is the one that will get you the 15 years. You can pull it up on your phone or your laptop and scroll around and take a look at what those numbers were over the last 15 years. So that's our price numbers. So now let's jump into our supply and demand, specifically new listings. These are the listings that were taken in the month of October. And 3 of our 4 counties, again, we got this 3 out of 4 trend going on, were down with the exception of Riverside. Riverside County actually saw a little bit more listings in the month of October than we saw in the prior month. And again, actually what is unusual is to see listings increase in the month of October. That generally doesn't happen. So this month, Riverside's the outlier with seeing a few more listings. A month or so ago, and we'll talk about interest rates in a minute, a month or so ago, I had indicated on the snapshot, well, maybe we're going to see more listings in the 4th quarter than we normally would. And I said that based upon the Fed funds rate cut back in, was that September? I think it was September. And I thought, well, things are changing. Maybe we'll see more listings. Well, things have changed. We'll talk more about the change. But at any rate, seeing listings down in the month of October. New listings, these are listings that came on the market in October. That's all I'm talking about here. So down, 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 with the exception of Riverside County, a little bit of an uptick, which again, I'll take it because we could use the inventory. So these are the numbers. Now again, even though they're down, they're up 5% in Orange County, almost 4%, 9% almost, 9%, meaning October to October. So as much as I want to cry about inventories down, we didn't see as many listings in October as I would have liked to have seen. All true, but compared to last October, listing inventories for October were up across the board. So, I mean, heck, I'll take it. That's a good thing. So these are listings from the last month, and again, they're up. I'll take it. 15-year chart, if you want to look into that, feel free. One thing, and I've mentioned this in every snapshot we've had, yeah, they're up, they're down, but man, historically inventory is down. I mean, goodness gracious, it'd just be so nice to get a little bit more housing stock, but hey, we're getting it, so I'm going to take it. Our next chart up is all the listings on the marketplace, and I think I pointed out in the last couple of snapshots that maybe we were a little bit concerned. Oh my gosh, standing inventory, this is all the listing, not just the ones from October, are starting to stack up a little bit. Well, they are, but just hold on for the next minute or two and we'll go through it. So basically they are flat. So listings, all listings inventory from September or October for the most part didn't change, fairly flat. If that had gone up a little bit, I would not have been surprised because things are staying on the market a little bit longer, but just a little bit longer. I went ahead and threw this red arrow over here just for comparison's sake. Look at the inventory we had. Now granted, I know it's 2008. Oh my gosh, 2008, wasn't that the Great Recession and real estate was a mess? Yeah, it was. But if we extended this chart out even further back, we would have seen, and I'm not exaggerating when I say 10 times more listings, 10, 12, 15 times more listings, even prior to the Great Recession, if you want to go back to say 2000 or 2001, 2002. So inventory is very, very low, and basically we were flat for the month of October. These are all, now again, flat for the month of October, but this is October over October. 22% more listings in Orange County, 11% more in LA, 12% more in Riverside, and 15% more in San Bernardino. So I guess I'd have to go back and listen to last October's or November's market snapshot, but I probably was whining about there's not enough inventory, because I'm still whining there's not enough inventory, but there's double-digit percentages more inventory available this October than in October of 2023. So those are those numbers. That's all well and good. Pending sales continues to be my sore spot. This is where I get my violin out and I cry. All 4 counties, buyers and sellers coming together, opening escrows, what we refer to as pendings, new transactions, just horrible. So, and they're all-time lows. I mean, they're all-time record-setting lows as far as buyers and sellers coming together. Not enough inventory, interest rates have risen a little bit, and here we are. We're just kind of in this little quagmire, which, by the way, if you're a seller, good. What do you mean it's good? Well, it's good because there's just not as many houses for sale. If you're a buyer, still good. You know, let me continue on before I tell you what's good and what's bad, but it's basically good for everybody. Here's your pending sales. Now, what I was talking about a minute ago is even though we had fewer listings, the percentages year over year, October to October, were up. Well, they're not up with the exception of Riverside. We'll get to that one in a minute. 20% less sales in October 2024 compared to October 2023 in Orange County. And last October sucked when it came to open escrows. So again, yes, it's very, very difficult trying to run a real estate operation right now. We just need more volume. So 20% fewer sales in Orange County, 20% fewer sales, 14.4% fewer sales in Los Angeles County. I'm going to go down to San Bernardino, 9.5 fewer sales October to October in San Bernardino. But a little bit of a green shoot. Somehow Riverside is the shining star. Riverside, actually, we had 3.5% more sales this October than last October. So that's an outlier. So every other county is down on pending sales. Good news is a good chunk of the business that I do happens to be in Riverside County, so I'll take it. So these are your pending sales. Again, the trend is still down. If you want to click into the 15-year chart and compare where we were, again, record lows continue. So you can click the link, and you can drag your mouse or your finger across this and see how many sales we have now compared to what we had. And again, this chart goes back 15 years. So what else have we got on here? Days on market. I threw these, I've got a couple new charts in here I haven't had in here previously. I threw this one in and a month supply because when I look at those other numbers, people tend to get a little bit concerned. Nobody's buying houses, meaning there's not as many sales. Inventories may be stacking up a little bit, maybe not as many listings as we'd like. So what does that mean? We got big problems. Well, if you want to take a look at the days on market chart, well, even though I'm not happy with those numbers, the average days on market, 16, 17, 24, 23. So we have anywhere from basically 2 to 3 weeks of average days on market, meaning you got a property, it sits on the market for a few weeks, you're in escrow. Now, are there some properties that are sitting on the market longer than 24 days? Of course there are. And those are properties, I just talked to the agents in my sales office. Nice homes, probably priced right, but maybe they're not selling in 24 days or 17 days. Well, what's going on? You know, we have this thing in real estate. When I first got into the business, it was all about location, location, location. Everything else is irrelevant. Well, I learned very early on in my real estate career, that's not true. And I don't know, I probably stole this from somebody. Location, condition, and price, okay? Not a darn thing we can do about location. The house is where it is. Well, what about condition? Well, for a very long time, condition has almost been secondary. We basically have said, there's so many buyers out there, they're lining up, 10 deep at the front porch. We don't need to do carpet. We don't need to do paint. We don't need to do any of that stuff. We can sell it in the existing condition. And of course, that third element is price. Well, maybe in this market, not maybe, in my opinion, definitely in this market, if you've got a listing that's priced right, based upon the last comp that sold, but maybe the condition's a little rougher, maybe it needs some carpet, maybe it needs some paint. My recommendation to my sellers today is, guess what? 6 months ago I said, don't worry about it, you don't have to put in the new carpet or paint. Today I'm saying, guess what? You want that price, you got to maybe put in the new carpet and the new paint. But again, the days on market are still less than 30 days across the board. Pretty simple stuff there. So month supply, similar but different. So the month supply is, again, this is our 15-year chart of month supply. So back in 2008, we had 18, 19, 22 months worth of standing inventory. Today we've got 2.7, 3, 3.5, 4.2 months supply. Now, if you've been watching my snapshots for the last couple of years, it wasn't that long ago where it was less than 1 month supply on the market. Everything just getting gobbled up. So yeah, these numbers are significantly higher as far as a month supply is concerned, but I don't even know if the National Association of Realtors still posts this, but for my entire real estate career, it was a healthy supply of inventory in the market is 6 months supply. A 6 month supply is considered healthy, at least it used to be considered healthy by the National Association of Realtors and their economists. Bottom line, we have not had a 6 month supply of inventory probably in the last 20 years that I've been doing this business. So inventory's kicking up a little bit, but certainly, well, actually, I guess I just lied to you. I said 20 years. It looks like it would have been maybe 12 years. How's that? Looks like we creeped a little bit up in Riverside County sometime in 2020, where we had maybe 5 months of inventory. But at any rate, basically less than 4 months inventory pretty much across the board. This is why I'm not concerned about downward pressure on price, because there's still not enough houses to sell. So what does that bring us to? That brings us to interest rates. So here we are, the volatile interest rate conversation that we seem to be having all the time. I've got my good friend Jerome Powell out there, put a little bit different graphic up here. Cuts are here, but okay, so today is November 8th. Fed met today, and Jerome Powell came out and said, was it today or yesterday? It's been a long day. Met within 24 hours of this video being recorded, and they came out and they did an additional 25 basis point cut to the Fed funds rate. whatever that was, 2 months ago. They did the 50 basis point cut to the Fed funds rate. We all celebrated and said, what does that mean? It means great news for mortgage rates. And then we realized, well, wait a minute, there's a lot of other push-pull factors here on what's going on with these interest rates. So, and I'll the next couple slides, I'll talk about some of those push-pulls. So this is Mortgage News Daily. You guys know I love this. This has been up here for now a year or so. But I want you guys to look at this differently. First of all, if you're in the market to buy a house and you haven't been pre-qualified, call me. Let me get you connected with my lender. Let's have this conversation. But the thing that you should be looking at isn't so much what the Fed is doing, which I've been obsessed with them for the last 3 years now, because there's too many things pushing and pulling on interest rates right now. So this is the Mortgage News Daily thing. This is today. This snapshot was done 3-4 hours ago. So basically we have a rate just below 7%. You know, if you kind of throw them all in a pot and you average them out, 6.92. That's really not what you need to focus on. What you need to focus on is the 10-year Treasury. The 10-year Treasury as of a few hours ago was 4.31. The 10-year Treasury really controls everything. That's the bond market. I don't get too overly technical in these snapshots, but the bottom line is the bond market says what the bond market says. And that doesn't always align, apparently, with what the Fed says. The Fed comes out and does that. The thought was, well, the bond market follows, and if the Fed cuts, the bond market's going to cut, the 10-year Treasury is going to cut, which is pretty much what dictates 30-year mortgages, and then we get happy. Well, guess what happened? Let's go to the next chart. A little bit more illustrative. This is from Optimal Blue. So let's take a walk down memory lane here for a minute. So this was back about 2 years ago. Actually, this is a 2-year chart. So February of 2023, we had rates at just below 6%, okay? And we had marched up from 3% back in whatever that was, 2019, I suppose, 2020. And we marched all the way up here to October of basically a year ago, October of 2023, to just under 8%. Some of you say, wait a minute, Lance, I did a refi, I bought a house, I paid more than 8. Well, okay, you paid more, somebody else paid a little bit less, but on average, we were just below 8%. Right here, right about here, is where the Fed funds rate came out and said we're going to have a 50 basis point cut, and it looks like that was, if my memory's mistaken, sometime right around the first week of October, last week of September. We had rates improve for about 2 days, okay? Interest rates dropped down to about 6.25, give or take. The trend was down for 2 days. Got super, super excited. I'm out there, yay, we finally made it. We're going to get some rates in the low 6, which, by the way, that was a great rate. I'd be happy with a rate in the low 6. If we break below 6, okay, I'll take it. But at any rate, and then what happened? Almost immediately, within a couple of days, the rate started shooting up. And why did they shoot up? Is because the 10-year bond said, we don't really care what the hell you're doing. We have other plans. And whatever the push and pull is on those plans, I'm not sophisticated enough to know. All I know is they're running the show, okay? So at any rate, so we've been marching back up to 7% mortgage rates for the last 45 days until a couple of days ago. So we shall see. If you zoom in on the very, very end of this, you got a little bit of a downtick. That's just the last couple of days. So what's happened in the last couple of days? Well, we had an election, and the Fed came out and said, hey, we're going to soften up on rates a little bit. So we shall see. All I know is if we can keep a rate at below 7, that certainly makes me happier. Above 7, this is a very, very difficult marketplace. Bottom line is this, there are tons and tons of buyers out there. How do I know this? Because we're engaged with those buyers all day, every day. I'm turning them over to my lenders, and my lenders are saying, every one of these people, Lance, want to buy a house, but the affordability at 7% is just not there for them. So they either have to lower the horizons on what they want to buy, or they got to make more money, or they've got to basically wait for a lower rate. So we shall see. So that's where we are with the rates right now, but we are sub 7% at least for today. I'm so tired of predicting where rates are going to go. I just don't know. So, but the trend seems like it's lower, but I don't control the 10-year bond, so we'll see what happens there. So we're just about ready to wrap up. I'm going to close with where I started. I hope to see all of you on December 5th at the Riverside County Convention Center for the Riverside County Economic Summit. I'm super excited because this is the first time I've actually officially partnered up with Rivco. Those are the county government folks. And I'm very thankful that they've invited me to come speak at their event on housing. Chris Thornburg is going to be doing the economic overview that he does and give us the latest and greatest. Aaron Hake, I think I'm pronouncing that right, is a transportation guy within the county. So he's going to talk about infrastructure and transportation. And I'm going to be doing the housing report for the county. So we'll see you next month, hopefully on December 5th. And I think that's our last slide. It is. Thank you very much. Have a great November. Have a wonderful Thanksgiving, and we'll see you December 5th.